The retail investment strategy is the latest endeavor of the European Commission, and it is part of the Capital Markets Union. In this video, in addition to discussing more about these two exercises from the European Commission, I wanted to focus on one of the proposed amendments that is made as part of the retail investment strategy and will affect the client profiling or the client classification under MiFID. As a bonus point, we will also see what the implications are of this change for the European distribution of alternative investment strategies and funds. If this jargon makes sense to you, if you want to know more about it, watch this video. The Capital Markets Union in 2020 came to its second iteration, and the goal of the European Union with the Capital Markets Union is to make sure that the state of the capital markets in Europe can catch up and be as vibrant as the Capital Markets Union in the USA. In the second iteration, the specific goal of the European Commission is to make sure that the participation and exposure that European households or European retail investors have to the capital markets can be similar, if not the same, than the exposure that American households have to their own capital markets. Of course, if you want to know more about the retail investment strategy as such, we have linked in the description of this video an article that tells you into more details what the retail investment strategy is. However, there are four pillars that the retail investment strategy wants to work on. The first one is improving cost transparency for product. The second one is making sure that there are no misleading or as least as possible misleading marketing communications for retail investors. Number three, making sure that investment advice is not biased. Number four, give value for money to retail investors when they invest into specific products. So the overall goal is to make sure that retail investors can gain trust into capital markets, and so the angle of the rules that is tackled by the retail investment strategy should be coupled also with an effort of increasing the financial literacy of retail investors in Europe. Let's talk now about the client profiling or client classification under MiFID. For the past 20 years, one of the cornerstones of the capital markets legislation in Europe has been this main distinction between retail and professional investors. In the MiFID ecosystem, this distinction serves the purpose of making sure that the protection and the regulatory response is tailored on the basis of the actual need for protection, if you like, which is, of course, bigger and more evident in case of retail investors. The proposed amendment of the MiFID client classification isn't really changing the big picture. We will still have a dichotomy between professional investors and retail investors. And this is part of the criticism that comes with this proposed amendment. In reality, society has evolved in the past 20 years, and within that segment that is called retail investors, there is a broader and bigger variety of knowledge, expertise, and appetite for risk that basically is hardly reflected by this sort of dichotomic approach between professional and retail investors. At the same time, in certain European domiciles like Germany and Italy, and if you want to know more about it, we have linked articles that talk about this topic in specific in the description of this video. In these two domiciles, for instance, there are new categories of investors that have been created, and those are called semi-professional investors. And so the need at European level is to make sure that everything is harmonized, and so basically there are no different rules or more advanced rules in certain domiciles over the other. Let's look at what it is actually proposed as an amendment by the retail investment strategy. Before we do so, we need to clarify a little the concept of opt-up or opting up in the context of MiFID. In certain circumstances, retail investors, as a consequence of an assessment carried out by an investment firm, can decide to forgo or waive some of the protection that is given to them as retail investors. The bulk of the change that is proposed is to modify some of these criteria and introduce new criteria so that basically we can expand the scope of retail investors that can opt up, or else better reflect the variety that exists in terms of knowledge, expertise, and appetite for risk within that same category. One criteria, which was the one of the size of the existing portfolio, has been halved. The threshold of 500,000 euros has been halved to 250,000 euros on average for the previous 3 years. And there is a new requirement that is introduced whereby a retail investor can also demonstrate its knowledge, expertise, and understanding of the risks of a specific transaction after having carried out a course. Now, on this point, this is very interesting because it will help for the European capital markets to really catch up with the American ones, in our view. And this is because there is increasingly digitalization in the provision of financial services and investment services. And so basically in the US nowadays, if you're a retail investor, if you want to invest in a more sophisticated or complex product, you could do so if you take an online course that is offered by the same broker on its same platform. This way, the broker records that basically you understand after having done the course the risks and the implications of the transaction or the investment into a product, and this way you're allowed to invest. Lastly, let's look at what happens for the distribution of alternative investment strategies. The IFMD receives the main client distinction that comes from MiFID, and realistically, alternative investment funds are born for professional investors. However, with a broader audience of retail investors that can opt up, realistically, we see that there is an opening of the offer of alternative investment funds also to the high net worth individual, the family offices, and other type of categories of investors that before were essentially considered retail investors and didn't fit the requirement to be able to opt up as professional. And that's because probably they didn't carry out 10 transactions in a set period of time, like it's one of the requirements, or else didn't really work in the financial services industry for a set period of time. And this means that basically also the phenomenon of retailization of this alternative investment strategy is made easier for all those managers that decide to stick for a variety of reasons to an alternative investment fund rather than wanting to venture into a long-term investment fund that is also an opportunity. There is more to come on European regulation and European distribution. As always, thank you for watching and stay tuned.